So, in today's episode, you'll learn all the steps of the mortgage approval process, including how long it takes, what happens after you get approved, and what happens if you get denied. Let's get started. Hi, everyone. I'm Carl,
Hi everyone, I'm Mo, lead mortgage planner at Mortgage Architects.
and welcome to the Homebuyer Show, where homebuyers get the latest strategies and tactics to help them buy their next home. And remember, if this is your first time on this channel and you want to get the latest strategies from home buying experts, hit the subscription button below, hit the little notification bell so you're up to date. So, Mo, can you go through, I guess, the basic steps of the mortgage approval process in Canada?
Absolutely, Carl. So when you're first thinking of buying a home, it's probably the soonest that you should probably look at getting a pre-approval done. So the first step most likely will be getting in touch, finding a trusted broker that you can work with, someone that has a good experience, good track record, can kind of really help you navigate through the whole process. The better the broker that you currently work with, the easier the process is going to be, right? I hate to say it, but not every broker is created equal, right? Not everyone's the same. Different knowledge levels, different experience levels can really make or break your experience with your first time buying a house or even your second or third time buying a house. So I get that quite a bit. I hear that quite a lot saying, my last experience was horrendous. I don't know why. And then we get more into the details and we find out, well, ideally some stuff that should be caught early on was caught later on. And once again, it turned into a very frustrating process for the clients. And ideally, a good trusted broker would ideally help you with that whole process right from the get-go. So first step would be doing your homework, finding someone that you trust, someone that you're comfortable to work with, and then reaching out to them. And whether it's meeting with them, ideally we were doing a lot of person meetings, but based on today's environment, we're actually doing a lot more Zoom meetings, over the phone, emails, whatever it is. And ideally when a client gets in touch with me, we'll go and have like a brief conversation over the phone just to kind of give me an idea what they're looking for. So when I am working on their stuff, I know exactly where to put my attention, my focus, and kind of look at some of the issues where I think they've given to me or told me that they might have. So what we do is we send them an application. It's usually just like an online application link. It's very simple to fill out, very user-friendly. They fill it out, they send it back to us with their documents. We take, like I said, 24 hours to kind of review that. And we'll kind of look at it, put it together. And 9 times out of 10, we find no issues. We put it together, we give them an approval, we'll give them a call, we'll reach out to them and say, Mr. Client, Mrs. Client, you're great for up to this purchase amount. This is what I would do. I would kind of work on this. If there's any extra documents needed, please provide this. And then we send them out their way, and then we'll get them to do what we call the fun part, which is shopping for a house, right? Ideally, your work has been done, your homework is done, which is the pre-approval. Now you're gone and you're going to go and start finding a house, start shopping around, and really enjoying that process of the home buying experience.
And what happens then after you've been pre-approved, you found your home, you want to put that the down payment on it. Like is after you get pre-approved, what's the next step? Like what's the next step once you found that home that you want to buy?
Yeah, so next step is most likely since you've proven or you're starting not proven, but you're found your trusted mortgage broker that you're working with the trusted real estate source as well, right? There's a lot of professionals that kind of work hand in hand and in sync in this whole process, right? Like there's not just one professional working. You'll most likely in this process be dealing with a lot of professionals, which I'm sure we're going to bring up later in our videos. But there's a lot of professionals in play here, and it's really important that they all work together in sync to kind of help bring your dreams together for you or turn it more into a reality. So once you've gotten your pre-approval, you're most likely reached out to a trusted real estate source or someone that you know is going to help you find the right things. You have had a meeting with them. They're going to go with their questions. They're probably going to go through their whole process that they do, and then ideally help you find that perfect house. Now, let's say you found that perfect house. What's most likely is going to happen now is that what we call is now you put an offer on that property. So the real estate agent is going to help you put an offer on that property. We'll wait for their offer to be accepted. Once that offer is accepted, they give you a certain time frame, a couple of days, depending on how much time you need to get you that financing approval. So almost every offer comes with conditions, right? So condition to financing is a very important one. So they give you a certain time frame. Now you take that offer, you will present that to your broker. The broker now will start from the pre-approval stage to turn that now more into what we consider a live deal. So we will take that, put all the applications. We've already vetted you as an individual. Now we're going to vet the property, send it up to the lender. They'll look at it. They're going to approve it. Within time frame, they'll come back to us with something we call a conditional approval. And a conditional approval just means it's approved based on the fact that we can meet the conditions that the lender has put. And sometimes the conditions could be, please provide us an extra bit of document here, please provide an appraisal on the property, depending if it's needed, or whatever it might be. And then we work with you or the client, try to meet those conditions within that time frame. Once we meet those conditions, the loan is final approved, what we call it signed off, and then you can go ahead and remove conditions. And then all you really have to do after that, Carl, is actually just wait for your moving day. So I would say kind of look around, maybe get everything else started, reach out to utility companies, whatever you need to do. So when you do move in, your house is pretty much ready to go.
How long does it usually take to get a mortgage approval in Canada?
It really just depends on time, right? So in a busy spring market, I would say your realtor should give you ideally like 5 days to condition financing or more, preferably. Like right now, we're just heading into the spring market. Banks are kind of slow. They're a little backed up right now. So ideally, we are seeing a little bit slower response times. So depending on the market, it's hard to say, right? Like in our market, sometimes it's a lot easier to get 7 days for financing, a lot tougher to get 7 days of financing in like a much hotter or upper market, let's say like Toronto, GTA, Vancouver. So it really just depends on the market that you are. But I would say ideally an approval could take 24 to 48 hours. The banks aren't slow, to maybe some days 4 business days. It's hard to say.
So how do the banks or your lender or your broker, how do they determine who gets approved and like the entire approval process?
So lenders and brokers, well, we kind of take a look at the application. We look at something called the 5 C's of credit, right? Then the 5 C's of credit kind of broken down would kind of see if you get approved for a mortgage. So the first and foremost that we look at, the first C is character. So to a bank, character is kind of like your credit, right? So a credit, ideally, is more like a promise to pay. It's an IOU. So you've taken a credit card, you've taken a car loan or a student loan, whatever it is, and you've gone to an agreement of a promise to pay to the bank and you're paying that on time. You've kind of kept true to that, so your character is considered to be good. But now if you have some underlying issues where you missed some payments, you've been late, or you refuse to pay, now that kind of makes your credit look bad, but also goes back to the banks or the lenders saying, well, his character is not the best because they promised to do something and they haven't. Why would we want to lend to them again? So that's probably a very important C of credit, which is character credit. Second one we look at is capacity. So capacity is just going more on, are you capable to pay? So what they're going to look at is your income, whatever it is compared to the current debt load that you have, new debt load with the new housing cost, new ratios. Are you capable to pay your current debts and the new house that you're looking at? That's the second C of credit we call capacity. Third one we look at is called capital. So capital is net worth. Now, depending on the scenario or what life stage you're in, because lenders know life stages play a very important part in your application. If you are brand new graduate, you've just graduated, you have a bunch of student loans, you haven't really built up a lot of net worth, it's very understandable based on your life stage. It wouldn't be so much to say someone that's close to retirement in their 60s and they have a lot of debt with no assets. That kind of looks very poorly onto the client, and the lender might come back and say, listen, even though he can afford to pay, we're not very comfortable based on what he's built up for himself for net worth. He's got too much debts compared to his assets. We don't feel comfortable. So the third C would be capital. The fourth C, what we consider, is called collateral. So collateral is the property that you're looking to buy. So we pre-approved you, everything is looking good. Now we want to take a look at the property. Sometimes it could be underlying issues that you might not know, but the lender might look into, where it could be an option, what could be an issue with the property, and it might even impact you negatively. Like for example, let's say there's a condo building, and the condo building has a really poor reserve fund study, and that could actually cause it to get into a special assessment later. Now I know some of these jargons are a lot to kind of take in. I'm sure we'll discuss that later on, pretty much what it's saying is that this building is going to cause you issues later on. Let's kind of walk away from there. We don't want to get into a position where now you're hit with some extra cost, some extra expenses that you might not be able to afford. Let's find you a different property or a collateral that kind of fits with you and your needs. So that would be the fourth C of credit. The 5C of credit is called conditions. Just looking at what market conditions are. Let's say the market conditions in your city. For example, and this is a very important one that lenders might take a look at depending on, let's say, somewhere in Toronto or the GTA compared to someone, let's say, buying in Winnipeg, right? Where the conditions might be different. If prices are going up and they're actually, the appraised value is a lot higher, while going into a marketplace where the appraised value has been decreasing just based on where the conditions are, they would kind of take a look at that as well and then kind of say, listen, we're not comfortable in this market, or if we are, we'll probably lend to a certain amount, maybe not more. So those are what they would look into, which is considered conditions, more market conditions. So altogether, that makes up the 5 C's of credit. And if everything goes through with those 5 C's of credit, everything looks good, you should have your approval. And that's what every lender or trusted broker should take a look at and actually should know their 5 C's of credit inside and out.
So what happens after you get approved? Like, well, what's the next steps then?
Yeah, so after you get approved, we get something we consider a conditional approval. So it means it's approved based on some conditions that the lenders have come back to. Most likely it just could be some more verification on the income side, or now we gotta maybe provide the down payment, or it could be something that was kind of missed before. And ideally, once you're kind of at the conditional approval, I would say you're almost at the 80 to 85% complete now. You're very close to being done. Once we meet those conditions, we provide the extra documentation that the lender is looking for, then we actually move that conditional approval to the final approval stage where now it's finally signed off. And the only thing you got to do after that is kind of meet with your lawyers and then kind of sign documents with them, provide the legal documents that the banks will provide to them to sign, and then you just wait for your possession date.
So what happens if you get denied the approval? What's your next steps then?
So if you get denied, there's probably a reason why we're getting denied. You're getting denied because there's some underlying issues that we should have caught in the pre-approval. And if your broker is a trusted, experienced broker, would have told you, listen, these things might cause you issues with the approval, but let's say that part was totally missed as well. And then there were some underlying issues that we just couldn't uncover, whether it was debt load or income levels or credit. The next step is pretty much to sit down with your trusted broker and actually work on a timeline or a specific plan to get you ready to buy a house. It could be 6 months from today, it could be 9 months from today, it could even be a year from today. But ideally, if you set a plan in motion or set a plan in place, it's just that much sooner you'll get into a house. You just might be a year delayed. But looking into being a homeowner, which is a lifelong thing, it's a lifelong journey, one of the biggest assets you have, it doesn't hurt sometimes to wait that period till you're completely ready to buy, because it would benefit you and you don't come into a place or a situation where you can't afford a house, right? And then you end up losing that house, which we consider, and with lenders, we consider a foreclosure, which is considered sometimes to be a very unfortunate thing and does impact you for a very, very long time. So ideally, you want to be completely ready, and if you do have to wait a bit and the lenders think you're not ready, it's best to kind of work on those underlying issues, any weaknesses that you have in your application to actually ready to buy when you are ready. So there's no more issues, or technically should be no more issues after that.
And remember, if you're getting value from this video, we'd really appreciate you hitting that like button. And the question of the day for you is, have you recently gone through a mortgage approval process? How was your experience? Let us know in the comment section below. So Mo, what percentage of mortgage applications are actually approved?
It's a very tough question to answer because I can only talk about the applications that I get, right? Like I haven't looked into the national data of how many applications are sent in, how many are approved. I'm sure somewhere there's some data out there. I would say ideally our clients are 9 times out of 10 we get them approved, right? Because ideally if they're not getting approved, we're catching them in their pre-approval stage. We're working with them to get them ready to get approved. So when they're actually finding a house, we have a much higher rate. And that's the reason why, going back to some of our earlier videos that we talked about how important the pre-approval is, right? The pre-approval process, gets you really, it really sets you up, kind of gets some, it puts, the word that I'm trying to say is that it gets you ready to go almost, right? Almost lets you know what to expect, right? So there's no surprises, there's nothing. I always tell my clients surprises are good for birthdays. It should not be good for a mortgage application. There should be zero surprises in your mortgage application, right? So with our clients, I would say 9 times out of 10 we get them approved, fairly high, and any good trusted broker should have the same levels up there.
Now, do you have anything else to add in terms of the mortgage approval process?
Yeah, I do. So I would say once again, we do find clients sometimes they come to us they're not ready, but I've had a lot of clients that have worked with us and they haven't given up, which is the best thing that I could say is don't give up, right? Whatever the underlying issues is, it might take some work to put together, but it's worthwhile at the end. We worked with clients sometimes 6 months, sometimes even up to 2 years ready to buy, and when they bought their house, it was for them and for us almost like a life-changing event, right? It was something that you once you work so hard to do something, it's really worth it at the end when you get to do it. I've had clients cry in my office and very emotional moment for them. But what I would say is if you haven't gotten approved, it's not the end of the world. It doesn't mean that you should give up. You should work, get together, get a plan together, work on it together. So when you do achieve it, you know that you've achieved something that's very important to yourself. And homeownership, one of the most important things that you can do for yourself is become a homeowner.
And if you want to learn more about the mortgage approval process and everything else to do with mortgages, you got to check out these playlists here, as well as this playlist for other additional home buying tips and strategies. Thanks for watching, and I'll see you in our next video.